What advice would you give someone who wants to become a crorepati?
You don't have an option, but you have to adopt AI. Okay. You marry AI and teach people how you can use AI. That can be a good starting point. At the same time, create content. If you spend more money, you earn more money. ये पैसा कमाने के लिए पैसे खर्चने पड़ते हैं.
So what are the rich people buying?
The wealthy investors, they know something that we don't know. The objective is to preserve the capital.
Okay.
Capital preservation first and then appreciation. I've seen younger generation being very cautious about their money.
So Finfluencers, do you think have helped India or have, brought Indian education about the financial markets down?
If an influencer is promoting any particular product, that itself is now illegal.
Okay.
By law.
Okay.
Biggest red flag.
Okay.
Someone tends to control the outcome, which is not possible.
Okay. The new Ambani, the Adanis will be from which industry?
Healthcare is something that one must keep an eye on. So usually what I've seen is that people enter with a very wrong expectation. इसमें तो पैसे डबल होते हैं. इसमें तो ये साल का 20-25% तो निकाल देता है.
What is one single asset that I should definitely invest in heavily?
AI is definitely going to take jobs. That is for sure. And I've spoken to people who have been a part of the core LLM, top LLMs of the world.
Yeah.
So in their core teams, they themselves have, told me that we are also scared of what we are building.
Okay.
And very soon, I might also get replaced.
Hello everyone, welcome to the 12th episode of the Arnav Khandray Show. Today with us, we have an awesome guest, Devansh Mehta sir. He is a chartered accountant and a founder. He's managed more than 2,500 crores of wealthy people's money. And today he's come here to tell us his investment secrets. So enjoy, sit back, relax, and maybe take a few notes. So, sir, I saw on your LinkedIn that you bought your first stock at just, 15 years old. So, what made you obsessed, with the stock?
So, the story over here is actually more than obsession, it was curiosity.
Okay.
So, my uncle, my dad's real brother, so he is a chartered accountant and he is very much into the stock market.
Okay.
And he's the one who used to tell my dad what to buy.
Okay.
He used to manage my dad's portfolio in short. They used to have these conversations that अभी ये लेना चाहिए, वो लेना चाहिए, ये अभी इसको बेचते, add up more on this.
Okay.
And I was in my 8th, 9th, 10th grade. And all of these years you have been listening to these conversations and being a Gujarati, all the social events are more or less around stock market.
Correct.
Somewhere okay, ये ऐसा कुछ है stock market. One fine day, they also made me a part of the discussion. Just listen.
Okay.
I was just there listening to the conversations. So I asked, hey, what exactly is the stock market? क्या होता है ये? They told me, no, you two phone लगा and either you make money or you lose money.
Okay.
So he just told me like this in a very fun way. तेरे को 2 phone घुमाने हैं, then you might either make money or lose money.
Okay.
So that was a curiosity कि अच्छा ऐसा. Because, the idea of making money as a kid, you have to, wear formal wear. You have to go to your office, reach early in the morning.
Yeah.
You have to work a lot and then you come back home. That is the routine. Like that is how you make money. That is the ideal, impression you're given as a kid.
Absolutely.
So this was very unique. Okay, this is also one way of making money.
Mm-hmm.
And that's where I actually, started learning more about this entire stock market, buying shares, buying companies, and the whole idea of owning businesses.
Mm-hmm.
So I used to help my dad in the, documentation paperwork part. That time we didn't have those apps, NetBank. That is 2011 or something.
Okay.
So that's how the journey started. And that's how I became a part of the stock market ecosystem. And one fine day, I just bought a stock to see how it's going.
Okay.
And, obviously, went and lost. That's a different journey.
Okay.
Yeah, that's how I actually ended up buying my first stock at the age of 50.
So, can you tell us the name of that stock?
It was Engineering India.
Okay. So, your first was
a short-term one. And
yeah.
Right now, the stock is doing very nice. But back then, was just, let me see now. I used to buy the stock and just stare at the screen. Okay, nahi, jayega.
Correct. Okay. So, how did you get the money for this? Your father gave you the money for it or you saved it?
No, this was, Dad gave me some money to start off with.
Okay.
A very simple, basic amount.
Correct. Okay. So after this journey, you did CA. You became a CA. So you could have taken a simple career path. you did CA, you also got a good job offer, you got a good company, you could have worked there. Why did you decide to start a business? Why start OpiGo?
So business was always on the list.
Okay.
It was very much pre-decided that I someday have to do something of my own.
Hmm.
So that was always there, back of the mind, that we have to start. I have to do something of my own, and CA was for qualification purpose.
Okay.
So it was purely so because I didn't want to pursue anything related to CA, like audit, taxation, accounting,
Okay.
or joining any of the big four. So that wasn't on the list. It was purely for qualification that happened. It was a very tough, beautiful journey, but somehow it happened. And that time, wealth industry was, it is still the upcoming field, and it was booming a lot. So I thought I want to pursue something in the wealth advisory industry. And that's how I ended up joining ASK Wealth. That's how I got entry in the actual finance world.
Okay.
And, you are managing portfolios. You get to see where people are investing, what to expect out of how many asset classes are there. And apart from mutual funds, stocks and bonds, there are so many other asset classes. So all of that basic learning is what I got from this wealth advisory.
Okay.
Just to realize that direct equity is the space where people used to actually burn their money, and the IRRs used to go down. So that's where I thought, if I want to do something, some innovation, some disruption, it needs to be in the direct equity space.
What is IRR? Can you just explain?
Internal rate of return. Basically, the portfolio returns, overall aggregated returns that you generate. So you may be having some money in bonds, something in some of your direct stock holdings,
Okay.
your mutual funds,
Yeah.
Something in real estate. So eventually, the amount that you have invested and the present market value,
Yes.
randomly invested.
Okay.
So to bring everything in one simple metric, it is the IRR.
So, you've managed over 2,500 crores of wealth, which sounds glamorous, it sounds nice. So, what is something about wealthy investors that most middle-class Indians, completely misunderstand? Like something the wealthy understand much better than the middle class ever can. What is something like that you see?
That's a good question.
Yeah.
So basically, the impression that we have in India, at least, is that the wealthy investors, they know something that we don't know.
Correct.
That is the ideal impression.
Yeah.
And it is totally false.
Oh, okay.
There is nothing that they know. There is no secret information that they are having and we are not having.
Oh.
First, very simple. But in that way, there are many wealthy people in India. So if everyone has that secret, it's no longer a secret.
Correct.
Also, if there are so many wealthy people.
Yeah.
Right. So what is different from them? It is the discipline that they are having.
Yeah.
I'm sure people who are, the non-wealthy, we shouldn't call it like that, but people who are not retail investors, I'm sure they wouldn't be spending a monthly review. They wouldn't be spending 2-3 hours every month to review their portfolio, every month, every quarter.
Yeah.
That discipline is not there.
Oh.
I would be adding investments based on my conviction. I won't be having a system in place.
Correct.
I won't be having an asset allocation in place.
Yes.
So there is no secret. Asset allocation is a very normal thing, common thing, which is out there on LinkedIn, everywhere. There are so many finance creators.
Yeah.
They all are talking about it. Now you can use AI and, get your entire portfolio reviewed. If not reviewed, what are the steps that I need to take for a portfolio my size?
Correct.
So, you have the intel. You have the source of information. It's just whether you want to do it or not.
Okay.
So wealthy people, obviously they have wealth advisors, or even if they don't, they have the discipline of having these basics in place.
Okay.
And that is the biggest differentiator that, I witnessed. So we used to get on a monthly, quarterly review calls.
Yeah.
They used to be assessing what needs to be included in the portfolio, what needs to be removed.
Yeah.
Simple stuff. Track the markets, anything that is, any macro factors that might affect the portfolio,
Correct.
be it an individual stock or a mutual fund, whatever it is.
Okay.
So these are the simple things that they used to follow. And that's it.
Okay.
So
let's say if, there are a group of 5 people, 5 friends who are very wealthy, very rich. They own companies, let's say they're very big giants in India. Okay, so they know information because they are controlling it, right? They know what's going to come, what's going to go out, what stock, how much stock do I have, how much sales am I going to do this year, etc., etc.
Thanks.
So even if you're not actually saying it out loud, you can hint it around, right? So
Correct.
that becomes a valuable tip of sorts. So that is a very huge differentiator that I feel that is missing with the retail investors, because the wealthy can obviously hint around. They also are smart enough to, avoid these regulations and just hint around. So, I mean, that is what I thought. So is that right, or is it?
So this would be IA direct equity, individual stock.
Correct.
So if I know that this regulation is going to be passed, because I was there in the committee with the government and I know that this is going to come out.
Yes.
And I hint out to my friends. So that is insider trading.
Oh, first. Okay. Even a hint. Even
a hint.
Okay.
Intent is that you gave out that information.
Okay.
People are doing it.
Okay.
But that is not the right practice.
Correct.
So if someone wants to do, even you can do. Even a retail investor can do.
Okay.
If I'm an employee in that company, I don't need to be wealthy. I just need to be in that meeting.
Correct. Okay.
As an intern or as anyone.
Yeah.
So that insider trading is not a strategy.
Okay.
It is you are just trying to outsmart the system.
Correct.
So so when we talk about financial strategies, financial discipline.
Yeah.
So then this is not apple to apple.
Okay. So what are the styles that you see? When let's say a wealthy person, let's say who has crores, okay, let's say 50 crores.
Okay.
He's investing 50 crores and someone who has 5 lakh is investing the entire 5 lakh corpus. So what is the different style? Like, how are they going to invest differently? What is the difference?
Okay. So now over here, the thing is, someone with 50 crores, first thing that they are very well aware of, majority of them, if not everyone, that the objective is to preserve the capital.
Okay.
Capital preservation first and then appreciation.
Okay.
That is the mindset. First, what we have, we need to ensure that it is growing at a decent pace, safely.
Okay.
You can't punt this money. You can't, aim that we want to double, triple this. So the core idea is to grow your money, but that can be the first objective. First objective is to make sure that this is stable.
Yes.
This is growing and it gets passed on to my future generations in a very safe, tax efficient manner.
Yeah.
This is the core idea and objective for someone with a 50 crore corpus.
Okay.
Now someone with a 5 lakh, while the amount might be small, but for that person it's 50 crores for him.
Correct.
And because that is all he has.
Yes.
He or she has.
Yeah.
So over there, now when the ticket size increases, the amount of the number of asset classes where you can invest also increases. Because then after a point, how much will you put in mutual funds?
Correct.
How much will you put in stocks? How much will you put in, bonds? So after a point, you need to diversify. You need to get into asset classes which are unconventional.
Yeah.
And that is where the diversification happens. But someone with a 5 lakh amount corpus, so they might want to stick with simple mutual funds or ETFs or direct stocks.
Okay.
So this is the second thing.
Yeah.
Also, the case with the 5 lakh one is that they essentially want to grow this money.
Okay.
The whole idea of them investing is that, okay, now I have my expenses in place and this is the corpus I have, which I would like to, grow so that I can achieve this goal, that goal over 10, 15, 20 years.
Okay.
So usually the amount in case of a retail investor is to grow money and, fund a particular expense.
Correct.
So they usually tend to invest in aggressive strategies with an idea like go all equity or go, because then again in 5 lakh rupees corpus, if you put something in debt mutual funds, and some part in bonds, something in REITs, then your overall you won't see substantial return because your IRR will go down. So in case of a retail investor with a small ticket size, it's usually to grow money.
Correct.
But that might not be the case with the actual, a wealthy guy with a 50 crore portfolio.
Absolutely.
Dynamics change that.
So what are these people buying differently? If you see a 5 lakh person who's, as you said, he or she is investing with a goal in mind. Like, I want to buy this. Let's say I'm saving to buy or investing to buy a car. So what are the rich people buying? Like, if they are making money from 50 crores, at least they'll make 5 crores or something back, right? So what are they aiming for? What are they going to buy? Is it an asset or is it an expensive, something like a car?
So this portfolio is not their net worth.
Okay.
So this is their liquid investable corpus.
Okay.
Something that after everything, after I have bought a car, after I have bought a house, I'm having this funds to invest.
Okay.
And when they invest this amount, it definitely is not going to be for a short-term period.
Correct.
If they have any such expenses in mind, so let's say if someone wants to buy a car, but if someone wants to buy a house, so then they know that, okay, this is the installment. I might have to pay this amount by the end of 4th year, 5th year, 10th year.
Correct.
So accordingly, their portfolio is getting customized.
Okay.
So then that much amount will be in debt mutual funds, will be in bonds, which will mature at year 1, this much in year 2.
Yeah.
Okay. That's how the entire asset allocation is done.
Okay.
If they have a specific rule in place.
Correct. So have you ever actually seen someone with a 5 lakh corpus grow it to 5 crores?
Oh, no.
Okay. So
Personally, no. I mean, you may have seen stories where, you buy a call or a put at on an expiry day.
Yeah.
And if it turns out to be those hero stories that
zero to hero,
very short stories are there. I mean, but personally, someone I know, I mean, I have seen IPO listing gain stories.
Okay.
I have seen specific multi-bagger stocks. I mean, not multi-bagger, they turn out a multi-bagger. And especially after the COVID run.
Yeah.
So 3x, 4x, that is, but then again, like, that was not the only stock they had.
Okay.
Well, a part of their money had gone in that stock, and which happened to, 4x.
Yeah.
So then at an overall portfolio level, it might not. So in your case, 5 lakhs in your example, that is the entire corpus amount.
Correct.
So if I put all of that in one stock or in that one call or put, then the chances are that it might become 5 crores or 50 lakhs.
Because you're taking more risk, full risk.
You're going all out on one stock.
Yes.
Those cases I have not seen. I have not seen someone so financially illiterate.
Okay. So, irrespective of the corpus amount, what is a good return in today's day?
I would say if you're making 15% CAGR,
yeah,
you have it. I mean, that's beautiful.
Okay.
So what else do you want?
Irrespective of the
amount, irrespective of the 15% is like the best. 18, 20, that is like cherry on the cake.
Correct.
But then 15, if you're able to manage 15%, because every 3 years, 2 years, or maybe every 6 months, some event is going to come up and markets are not going to be favorable.
Correct.
As we see for the past 2-3 years, markets have been very tricky. So this is a phase. And somehow if at a 5-year stretch, if you're managing 15%, that's beautiful. So 15%, 5 years is basically 5-year CAGR of 15% is doubling your money.
Correct.
Okay. Well, this should be the rational expectation from the stock market.
Yes.
Or mutual fund, whatever, like whatever avenue is there to put money in those accounts.
Good. So, coming to education part, the Finfluencer industry is on a boom. And, many scamsters and, many lawsuits have happened because of that. So how can a beginner who's just investing or is just starting to invest, a 50-year-old, let's say, who's, looking at this and is curious about the stock, how can that beginner distinguish education from this marketing gimmicks or marketing? Real education from marketing?
Oh, okay. So now if we are talking about now as in 2026,
yes,
then AI is there.
Okay.
You don't have to, develop trust for any particular influencer or content creator.
Okay.
AI is there to give you your answers. So that's like your trusted.
So sorry to cut you here, but completely relying on AI, is that a viable thing?
No. Are you, so right now, okay, so let's break this down.
Yeah.
You are mentioning about content creators, financial content.
Yes, influencers.
They have a product in place to sell. Let's see an example.
Okay, yes.
Okay. So, let's say Arnav.
Okay.
Arnav is the influencer right now.
Okay.
Has good reach, good followers on Instagram, and he's making finance related content.
Yeah.
So what kind of content? Let's create a maker. So I can understand.
Okay. So this is what I'm actually asking you. So is it, some certain type of content that you should avoid, or is it, there are hints? Okay, so this type of content is there, so this may probably be a fraud. Or if Arnav is, let's say, has a course also, he's selling a course. So is that more into the fraud category, or it can be genuine also?
Oh, okay.
Yeah.
Oh, so right now, see, if you're, okay, so taking 2 steps back, SEBI has come up with the rule that if any registered intermediary, so when you say registered intermediary, it can be a registered stockbroker,
okay,
registered advisor, registered portfolio manager, PMS guy,
okay,
mutual fund. So any of the registered entities with SEBI, they can't directly deal with any non-registered folks who are marketing their product.
Okay.
First thing, if an influencer is promoting any particular product, that itself is now, that is illegal.
Okay.
By law.
Okay.
So this was, I think, 1.5 or 2 years back, this rule came out. Can't deal with registered folks, can't deal with unregistered folks.
Okay.
So that question gets ruled out over there. If someone is still doing it, The registered company itself, that advisor or someone itself needs to be assessed, like whether it was out of ignorance, or it was like they forgot that about this role compliance, or it was genuinely still they are going an attempt. So that is one red flag.
Okay.
Second is the influencer right now, if they are promoting specific products or stocks, that is also not allowed if they are not having the license, if there are no relevant disclosures. So these are some red flags that you can easily point out.
Okay.
So that is one.
Okay.
So your question about selling courses, if I am selling a course, I am a finance creator, what kind of course? So this is basically helping you learn about fundamental investing or technical investing, which is fine. I mean, I have some knowledge. I'm trying to spread that knowledge via a course, and I'm monetizing it. And for the promotion of that course, I'm using Instagram as my medium. Till the time you're not giving out any specific stock tips or advice, or giving a risk assessment test or plan, it's all good. You are sharing educational content, not any stocks, no security specific stock contents. And also there is a rule where SEBI has said that if you're using examples of real-time prices, then that price needs to be 30-day old. Although here it was 90 days. Now it has come down to 30 days. So then you can't use real-time prices in your examples.
Makes sense.
So this way basically, so it's not illegal to promote your product because people want to do business, which is fine. So then you're operating in the criteria and rules set out by SEBI. Totally fine.
So SEBI, registered analyst, that person can give you a stock tip.
SEBI research analyst. They are qualified enough to give you a stock recommendation and monetize it. So they can actually give out public stock recommendations.
And monetize also charge. Okay. Fine. So, can you also give us, basic checklist? Okay. So now, like you said, so just, going through a summary. So you said that if someone is selling, that is also now become a red flag, right? Because you can't sell basically now anything related to it. Then there is specific stock tips that if someone is saying, then that is also incorrect.
Without a license.
Without a license. First of all, SEBI-registered, the person should be SEBI-registered. That is a green flag. Then you go on from there.
Correct.
Okay. So that is like the main criteria.
That is the main. Simple and main. And if you want to see, now if I say I'm SEBI-registered, you check that. So the data is available on the SEBI website. You go, you select the category of the license. You get to see all the names. The relevant numbers.
So coming to this industry again, just going at it. So Finfluencers, do you think have helped India or have, brought Indian education about the financial markets down?
No, definitely they have helped India. They have made people realize about the importance of investing, financial aspects. And the general awareness. So today people are taking anything related to finance seriously. Be it not just investing, it can also be credit card, it can also be your expense management, it can be anything. So people are taking that seriously. It is because of these content creators. Because people of our age, people of this generation, they needed something in their language. And finance content creators, they are filling this gap. Which otherwise I wouldn't go proactively on a website and see, what a government website and take up courses. That was never going to happen. To put it out very practically. Content needs to come to you. In your language. In the way that you would relate to it. So that these people have done it very well. So they have made content fun. Different, not so boring. And so that's how it all started, right? How there may be, some bad examples, which is there in every field, is what I. So that is always bound to happen. So you have to keep that safety net. Like some people are going to misuse this or misuse their
content.
So that overall, on an overall basis, they have definitely helped India become more sensible, smart, and financially literate.
So, if let's say you were the finance minister of India, what would you remove or what would you add in this, financial rule book of sorts, or financial ecosystem?
That's a difficult question. I think one would be that, making financial literacy, so making it compulsory in some way or the other. In schools, colleges, or like an extracurricular. and get those 1-2 extra grade points
Correct.
to this in some way.
Okay.
So, making that compulsory. So people actually, you are fundamentally in the roots only, you are seeding this thought. Okay, there is something called as financial literacy where you need to pay attention and know the basics. That can happen at an early age, nothing like. That would be the easiest and quickest. I don't know how. Implementation, I don't know, but this would be something that it needs to be made compulsory.
Okay. So this is a loop or a collaboration with the education sector.
Correct.
Which is right now at an all-time low, I feel, in India. But okay, and what is one thing you would remove from the current ecosystem?
Oh, the fact that it's not compulsory. Generation was focusing more on survival.
Okay.
So for them, survival, providing food, shelter for their upcoming generation, that was the whole target. Okay. Having that surplus money to invest at a larger scale, I'm talking about. Yeah, obviously, people have been investing, they have made their... But it was always secondary. Okay. They didn't have the bandwidth. They had so many responsibilities, so many things to achieve, so many things to take care of.
Yes.
Technology was way behind back then.
Yeah.
So their entire focus, entire generational aspect was more on the survival part.
Okay.
So for us and the generations coming, they have that sorted. They might not even go out and buy a house now.
Okay.
Renting scene has become very easy. Maybe you already have a house at your place.
Yes.
So too many responsibilities have been, taken care of by your parents. So now this generation, they have the bandwidth. They have the mental bandwidth to think about more deeper and important aspects.
Correct.
Which we can see it's very relevant right now online also. They are taking up good topics. They are asking the right set of questions because they have the bandwidth.
Yeah.
They can think of doing more. That's why their entire work-life balance debates, everything comes into the play because they are mentally free.
Okay.
So this would be the right time, at least if not the right time, the best time to make this financial literacy compulsory, because now you don't have an excuse. You might be left out with more amount of money to either spend or invest.
Correct. Okay.
There's no harm in spending, but you need to just chart it out well.
Yeah.
So tomorrow you need to manage your own balance sheet.
Yes. So coming to, managing your own balance sheet, if let's say I was investing, if you had to create like a perfect investing rule book, what would be your top 5 rules? A checklist of sort for picking a stock or picking, whatever, picking a mutual fund or whatever. So how would you select it? What are your top 5 checklists or metrics that you check while selecting something?
Okay. So it starts with first, so this is with the assumption that, okay, the amount, I have all the expenses, monthly expenses are done, and this is the amount left. So I have to do with this amount.
Yeah.
So it all starts with basically what is the objective of this? As we earlier mentioned, very simple.
Yeah.
Karna kya hai ye paise ka? Are we doing it to fund something maybe 1-2 years later?
Okay.
Is this to buy a house?
Yeah.
Is this for your future generations, or you just want to keep the money aside, park aside, and let it grow?
Yeah.
No agenda.
Okay.
It all starts with this question. So first, karna kya hai?
Yeah. Okay.
We'll decide karte hain.
Yes.
Karna kya hai? Now, if you have no other added responsibilities, there is no rent to pay, everything is sorted.
Yeah.
You don't have a family. I'm talking, since you're talking about someone very young.
Correct.
So if they don't have a family, then it's all about you invest, go all long-term, all equity.
Okay.
That will be the goal. So we just create a person on, let's say like some 25-year-old, not married, has a house sorted, has a decent job, and some basic expenses here and there, lifestyle expenses.
Yes.
After that, I'm having some corpus money. I would definitely go all out on equity, 100% equity. Now, there are 2 ways to put an equity. One is I directly buy individual stocks. Yeah. Or I buy it through a mutual fund. You need 2 avenues.
Okay.
Or a small basket investing, something like a small case or...
Correct.
So, now we have narrowed down to this.
Yes.
These 3 options.
Yes.
You might not want to. You also be self-aware, like how much knowledge do you have, how much time you can give to track stocks, or if you can't, then you might simply want to just put in 2 or 3 mutual funds across categories. Yeah. One, a multi-cap, any diversified fund, one small cap, one mid-cap, or one ETF.
Okay.
So 2 or 3 mutual funds are, I think, more than enough.
Okay.
And if you are sure about the amount is going to be more or less same every month, then you do an SIP.
Okay.
Simple. Nothing complex. And you knowing that you're going 100% in equity long term, someday it will grow. And what is important is that if your SIP is, that system is set, then I think that discipline will keep falling. Automatically will keep falling.
Correct.
This is with an assumption that there are no
Other costs.
and there are no expenses to take care of. Like, I don't want to buy a car after 5 years.
Okay.
So then if that is the case, then you might want to be a little more strategic about it.
Take more risk.
Maybe you put something in debt funds.
Okay.
Or maybe put in a bond.
So if let's say I'm taking equities, let's say I've decided to go with equities, I'm not selecting mutual funds or, your debt or any other instrument.
Direct stocks.
Yes, direct stocks.
Okay.
So what are the checklists for a stock to be qualified for me to be investigated? So for example, let's say profits have been increasing, which is a very clear good sign, right? So something like that. So are there any indicators of like that which you look out for yourself?
Okay. So when we talk about individual stock picking, again, some basic checklists would be that first thing, the industry where you're investing.
Yeah.
So that needs to be, supportive.
So the sector.
Your sector needs to be supportive.
Okay.
If this is like a company specific stock that you're entering, then sector might not be relevant.
Okay.
I mean, it is usually relevant, but if there is some particular story about the company, then you might want to dig into the company.
Okay.
Like why this story?
Okay.
Whether, let's say, if it is an acquisition, whether it is like they are doing very good, they are launching a new product line, or some regulatory aspect is going to favor this company's product. Aspects like those, the macro factors, like why this company, why this sector.
Yes.
That is like one good filter area. Like, so I know what's the reason of picking this particular stock.
Yes.
Then it directly comes down to a hygiene check of your financial, ratios.
Okay.
Like, does the company have enough current assets over current liabilities? Check the debt to equity ratio. Like, tomorrow morning, will it go bankrupt? That does it have? If
what is a good debt to equity ratio?
Lower the better.
Lower the better.
Anything around 0.5.
Okay.
0.2, 0.3.
Correct.
But it all depends. I mean, if it's a capex heavy company industry, then usually it is high with
property expenditures are more, so they take more debt.
More debt.
Yeah.
And it might be some tax related decisions also. So it's very company specific. But just a hint, like not getting into the exact number. It's more about the idea of whether this company has funds in their bank.
Okay.
Second would be the price at which you're planning to enter. Simple P ratio. Like at what price point I'm entering. If it is high, then whether it is actually worth it.
Okay.
If it is low, then whether it is actually a good deal.
Okay.
Just a sentimental correction where I can make, get that extra incremental 4 or 5% by entering at a low P.
Okay.
You check the pricing, financial ratio is done. You check certain news, you check the competitors, like why this company, why not its competition?
Okay.
Because if everything is same, then it has to be the same for its competition. I will go for the best small case. I will go for the best small cap competition of that particular company, which has a larger upside.
Correct.
So you see what benefits this particular company has.
Okay.
Check the website. People usually don't check the website.
Yeah.
A website is a good hygiene check. Like someone running a company, listed company, you just see their website, how it is.
Okay.
How whether it's very descriptive in nature, whether they are able to showcase what they are doing.
Correct.
It talks a lot about the management, their priorities, what the branding, marketing, simple stuff.
Okay.
So you, if you want, you can hear out some recent con calls. Read, there would be broker reports around there.
Correct.
Ask AI to summarize all of these aspects.
Yes.
To give you a summary.
Okay.
And see what the story is. If you feel that, they are going to get a trade order from this particular government, or they are going to get this, will then actually impact the stock price. Because some things might be very positive, but they might not necessarily affect your stock price.
Okay.
Check if they are paying out dividends.
So, you can see the holdings that people have of a company. So you can see the FIR holdings, the DII holdings, and the promoter and public also.
Right.
So what is, a general good thing here? Is it just an example? Is it a good when FIs and DIs are holding more quantity, less is public and equally promoter? Or is it the other way around? Is public holding more better? And what is a general good measure here? And of course, promoters also being one of the key factors. Are they holding more, less? What is a good green flag? Completely green flag.
So in this case, basically it's a two-sided story.
Okay.
Promoter might be having a larger holding. It's also possible that no one else wants to buy.
Okay.
That is one way to look at it.
Yeah.
Second is, if they don't sell, there won't be enough liquidity in the market. So the stock prices won't go up and down. They are not selling. Why? Because they are bullish about their own company.
Correct.
But if the company is doing so good, but there is no liquidity in the market, then the stock prices won't move up and down.
Okay.
Still, I mean,
yeah.
If there are a lot of DIIs and FIIs, they might enter or exit a stock not because the company is doing good or bad. Sometimes it may just be we are not bullish on India anymore.
Okay.
That is how FIIs also take a call. We need to reduce our exposures in the emerging markets.
Yes.
So sometimes them exiting a stock might not be a red flag.
Okay.
It might be a good opportunity. Okay, now, since they are selling, we can buy it.
Okay.
So it all depends.
Okay.
So there is never a clear rule set out that, okay, what is good, what is bad.
Yes.
Now, many of the blue chip companies, their promoter holding is very low. So actually, to grow that big, you need to, it's like your founders, right? On day one, you're holding everything.
Yeah.
Your seed round, you have to chip out some equity percentage. When you reach your Series F, Series G, promoters are left with 2, 3, 4, 5%.
Yes.
But then the valuation is high.
Okay.
So it all depends. I mean,
got it.
I can't give you a blanket answer.
Okay.
What is the right?
So if, let's take a case study, for example, let's switch things up a little bit. If let's say you're given 1 lakh rupees for investing, just 1 lakh rupees, you don't have to worry about any other costs. You just have 1 lakh rupees directly to invest. Looking at the current market levels, where the current market is, where would you allocate this capital and why? Just try to be more specific, as specific as you can, without, breaking any laws. So yeah.
Okay. So you said that I have 1 lakh rupees.
Yes.
With no costs, nothing to fund.
Yes. No other expenses. You just have to invest.
And the current market situation.
Yes. Yes.
So right now, the current market situation itself is very tricky.
Correct.
The oil thing, currently, there is no different answer to it.
Okay.
I would, if I had to go all in SIP lump sum, then I would put in index funds.
Okay.
I would cover 2 or 3 indexes.
Okay.
One would be your Nifty.
Yeah.
And the remaining 2 would be some sector specific.
Okay.
Which I may not have the answer right now, but I would see where the pricing is favorable.
Okay.
And play on the index. That is the safest way.
Okay.
Once you have some clarity, some direction, slowly, switch those to either a mutual fund, in a small cap space, or in a particular sector base, or you put that money in relevant stocks.
Okay.
When the pricing is favorable, or you have something to look up for.
Okay. So index fund is heavy first, and then
when you don't have clarity,
index fund is better.
Index fund is better.
Okay.
Sounds even if it goes down at a very low pace.
Okay. So let's say I had 1 lakh rupees and I invested. I took a huge bet. Okay, I bet on a large cap stock, any large cap stock I bet on, and it fell by like 20-30%, which the currently market is in that downward trajectory. So what are my options here at this point? I've invested heavily into one stock. It has gone down 20-30%. So what do you do in this situation?
I mean, if a large cap stock, if that is going down by 20-30%, that's a very big amount.
Correct.
This deviation can be there only when something actually wrong has happened in the industry overall.
Okay.
Or that particular company.
Okay.
So if something is wrong in the company and you have gone heavily, you have heavily betted on that company,
correct,
then it might be wise enough to book your losses.
Okay.
And having a 30% stop loss on a large cap company is also not wise. So I might have not waited for this 20% downfall.
Okay.
So where is a large cap? So even Zomato Eternal is now a large cap company.
Correct. Yeah.
Because of the market cap.
Yes.
So I'm not talking about startup large caps.
Okay.
Established
yes.
which have been in the game for at least 20 years.
Yes.
And if they are, going up and down by 20-30%, that's a very big jump It's a very big downfall.
Downfall.
So chances are that there is something that actually fraudulently gone wrong in the company or the sector. Okay, let's say if this last year we had this RMG ban.
Okay.
Fantasy gaming was completely banned. So in such cases, all the companies are supposed to go down.
Yes.
So then you might want to exit the company and the industry overall.
Correct.
So if that is the case, that for a large cap, 30%, I would hope the losses and pray that I somehow in my next bet.
Okay. So you said, you will cut your losses even before the 20 to 30%.
Yeah.
So where exactly, what is the percent where you cut off? Like 10, 5, or where?
10%.
10%
is good for a large cap.
So, I'm sure you do fundamental analysis and technical analysis both when you're, trying to invest, let's say, in a stock, let's say. So if you had to choose only one, let's say fundamental or technical, what would you choose and why would you choose?
If I had to choose only one, then I would choose fundamentals.
Okay.
Because fundamentals actually, speak about the company.
Okay.
And those are definitive facts about the company.
Yeah.
Because numbers ultimately speak.
Correct.
Technicals, while technicals are good for assessment. I mean, so there are some people who just do technicals.
Correct.
They don't get it.
Which also works by the way. It also works. Yeah.
It's all about their investment style. So that works. But then if you're actually a long-term player, then so I would put it this way: if you're talking about long-term, then pick fundamentals.
Okay.
If you're doing short-term, then pick technicals. Like this is the base rule.
Correct.
It's no news. But this is the thumb rule.
Got it. So if you were given the choice between picking one, you would choose
I would choose because I do long-term.
Correct.
So I would choose fundamentals only.
So, after years of investing and managing money for people and for yourself, what do your eyes see differently to investing that I may not? So, I'm a beginner, let's say I don't know anything, but you are an experienced professional. So, what are you seeing differently that I can't see?
Right. Expectation from the market.
Yeah.
Everyone has, whenever someone is entering into the stock market or finance, they have a very different expectation.
Okay.
The entire motive for them to get into investing is because they have heard of success stories.
Correct.
And abnormally high success stories.
Correct.
That is what got them interested. That is what made them read about finance.
Okay.
Because otherwise, proactively, I wouldn't just be a sincere guy and, I have to know about stock market.
Yeah.
There has to be some motivation.
Correct.
And usually it is the abnormal profit that your colleague or friend must have made. That is when you think, I need to people बहुत सुना है, investing मुझे भी चालू करना पड़ेगा.
Correct.
It's not because no, he's so financially literate.
Yeah.
इतना आता है नहीं, मुझे भी इतना सीखना पड़ेगा.
Correct.
That is never the case. So usually what I've seen is that people enter with a very wrong expectation. इसमें तो पैसे डबल होते हैं. इसमें तो ये साल का 20-25% तो निकाल देता है. मेरा फ्रेंड निकाल देता है तो मैं भी अभी ट्राई करता हूँ. 18 हुआ तो भी क्या बुरा चीज है. All of people have wrong aspects. So this is the biggest differentiation.
Okay.
No one is experienced. I mean, I am, still learning my way up. But I am very much self-aware to know that, you should have very rational and decent expectations out of the stock market. Because if you start chasing returns, then, you end up making wrong decisions. Because your entire idea is to, put money wherever I see a high upside. Then it's a psychological.
So, a relative of mine, they are also similar, but they are, I don't know if many people are doing this, but when, let's say you bought a stock and it went up, significantly up it went, and you made a good amount of money, but then you are like, thoda aur buy kar lena chahiye. So how is that psychology affecting investing? How is it will do?
Okay.
It will do. Okay.
At least if someone is new, I would say even 10 years in investing is new. Okay, it's not enough.
Okay.
Learn all the aspects, learn all the psychological aspects about the market. And apart from the technical ones, your core fundamental, 10 years is also new. So people still, I did not look here, I should have bought more. That regret comes when so someday, people will reach that maturity like, possibly nahi.
Okay.
There is no best entry price.
Correct.
If I knew, then I would have done it. If that was the case, then I only bought more. Because I would have gone all out loan as much as possible.
Absolutely.
So that entire understanding, comes over time. Where you stop getting, excited about the mistakes that you make and the wins that you make. So that is what one needs to attain, and that is all where we all are heading. Yeah. Someday we get there. That you are very sane about, हाँ लिया तो ठीक है, तो खरीदा, अरे नहीं लेना चाहिए था. But how do you know, यार?
Correct.
Not possible only. Why to try even challenging that aspect? Why do you want to control that outcome? It was never in your hand. It will never be in your hand. Kitna bhi AI use kar lo.
Okay. So, talking about the future, if, we are heading where you said, just looking at the future, if I was looking 10 years down the line, or let's say you were looking 10 years down the line, what is one single asset that I should definitely invest in heavily? Like, what is one sector or one asset that you feel, okay, this is going to be the next big?
Nifty.
Nifty? Oh, okay. That was a very simple statement. Are you sure about Nifty?
Very sure.
Okay. Yeah. And what are the factors that
go see? Also, we do it this way. We play the choice of elimination over here.
Okay.
What options do you have? First thing, real estate.
Yes.
You buy a house, but that is so putting all eggs in one basket kind of a thing.
Okay.
What locality or what city?
Yeah.
Which locality? What kind of a property?
Yes.
Whether it is a luxury villa or whether it is a affordable housing.
Yes.
You don't know whether it's a building. I don't know, whatever, or a shop. So many factors are involved. You have no control over it.
Yes.
So real estate is very tricky.
Okay.
So it might give you an appreciation if, government announces an airport or something comes up. Yeah, I don't know. Then you might, but not worth, putting all that risk for that one
asset. Okay.
One asset.
Yeah.
Second is your bonds or debts, again, fixed returns.
Yeah.
You know that this is the maximum you're going to.
Yes.
There is a cap limit to it.
Correct.
Third option would be your pre-IPO stocks.
Okay.
You invest in companies which are about to get listed, unlisted stocks.
Yeah.
Something like an NSE. Again, uncertainty involved.
Definitely.
Startups.
Okay.
Another avenue.
Yeah.
If you have good amount, if you are an accredited investor, then startups is one.
Okay.
Again, 9 out of 10 will go down. You have to bet on that's 1 or 2, which will be high risk.
Okay.
So your safest, historically, proven. Proven as in, there is no guarantee, but then again, historically, you have seen a pattern that is only going up and up.
Okay.
Because that is why we all go to office, that is why we all work.
Correct.
Those companies which are listed, the
Correct.
idea is to grow.
Correct.
So the entire universe is basically working for equity to go up in a way.
Okay.
You see, if you look at it that way, everyone go to office, everyone are working.
Exactly.
To support, to give business to some other company, vendors, this and that. Ultimately, सब लोग पैसे ही कमा रहे, economy को ऊपर ला रहे. Companies have to work, listed ones have to work even more.
Right.
And Nifty, why? Because again, diversification automatic हो रहा है. वो उनका problem है इस कौन से company को अंदर लेके आ रहा है, बाहर लेके आ रहा है.
Correct.
You might lose out on that incremental alpha, which you might have made by putting in 2 or 3 individual stocks.
Yeah.
But then again, is it worth the risk?
Correct.
So you lose out. You won't have any options if you 10 years.
Why not gold or silver or even crypto for that example?
See, crypto, again, liquidity, taxation, we don't know. It is not regulated 100%. There are many open questions.
Okay.
So crypto is something, and who is still sure about the dynamics of crypto?
Okay.
Is the data so transparent, public? We don't know, and it's a global war.
Correct.
For any crypto, it's a global war. Kuch bhi ho raha hai, kya bhi ho raha hai, we don't know. It's not safe, to be honest.
Okay.
And taxation is also the second question.
Okay.
So if your 10 lakh becomes 50 crores, so what tax you will pay in crypto versus what tax you will pay in your equity?
Okay.
They're also different.
Okay.
So it's assuming दोनों भी succeed करते हैं at the same level. Nifty or crypto ने same लिया.
Yeah.
So the taxation is my angle. Liquidity is my angle. It has to be more liquid.
So actually there are platforms now, Indian platforms, which are allowing you to trade Bitcoin and, etc., all cryptos also, which is also government backed. So because they're trading in rupees, not in dollars, and that is what the government mainly wants. So why not that? Like, why not go through that? Why not invest through that? Because taxes are also not that heavy compared to investing in Indian stocks or something.
No, so how to invest is sorted.
Correct.
So there are many good crypto companies, crypto brokers who are involved, so that process is done.
Okay.
But if you ask me that today, if I'm 100% sure about if crypto will be, as an industry where it is heading 10 years, I don't know. But for stock market, I am having much more higher conviction about this will be in place. Regulations will be in favor of stock market. I am not sure about the government's stand on cryptos. Anything can happen.
Correct.
So that uncertainty is there. So if you ask me if you have to pick only one, then equity is going to be my obvious choice. Liquid hai, proven hai thoda, track record hai, automatic diversification ho raha hai. So, and that has potential to give you extra returns. The rest everywhere there is a cap ceiling. Gold and silver, again, it has its own cycles. See, people have made good money in gold also.
Absolutely.
But if I'm putting money today and then keeping it there for 10 years, so I don't know in which cycle I've entered. 10 years mein kya wo cycle hoga. That is also very subjective. So if you compare a linear growth, save steady up down high hoga, COVID jaisa kuch aa jayega. But then I will obviously be more confident about Nifty. I think that this would be with, if you ask anyone else, I think majority would go with this.
So for you, Nifty is simple.
You can sleep peacefully for 10 years.
So which industries, if let's say Nifty was not an option and you had to select specific stocks or specific sectors that you want to invest in. So which industries do you think will, create the next generation of wealth? Like the Ambanis or the Adanis, or the new Ambanis and Adanis will be from which industry for India?
I mean, see, I feel healthcare is something that, one must keep an eye on. Because people, hospital jana.
Correct.
Oh, like, acha khasa, people, some people who are serious about health, they will invest more in healthcare products. People who are not serious, they will, might have to pay hospital visits. Healthcare as an industry will, somewhere, always be on an upside side. AI today, you don't know. So people are still figuring out the business model around AI and the acceptance of, making it as a part of your
daily life,
and then you are actually paying for it.
Correct.
Like tomorrow morning, iska जैसे newspaper के लिए subscription होता ही है. AI के लिए subscription होना ही है. Without that, life won't run. Today, still people are finding it difficult to pay for these subscriptions. So the moment this retail business model is discovered, on the retail side, for the B2B side, AI is very well picked up. There are many companies. So I feel AI companies might be the next. You can see once you have some conviction over, like, we all have been tracking AI so काफी noise है, but then again the business model is yet to be proved. They're still burning money. They're making good revenues, but they're at a very high burning cash burn level. So, but if you had to pick, then there is a scope of some hockey curve growth in the IT sector also. And since it was beaten down for almost 3 years, prices were bad. Historically, we have seen that, there is a reversal happening every 3 years. And with AI coming in the right way, large IT companies adopting AI in a very beautiful way where it becomes, because organizations will have to, implement AI, and they can't do it everything in-house. There has to be some large companies looking at your AI integrations also. It will reduce the labor, but then IT, it has to be there. So that is also something very interesting.
So healthcare and AI
is some things. IT should be on anyone's heart.
So, coming to AI, if many people are saying that AI is going to take your job, etc., what are your thoughts on that? And how is finance going to be, emerging with AI? Or is it going to be sidelined? Are your decisions going to be reduced? How is it? How do you see AI evolving?
So AI is definitely going to take jobs, that is for sure. And I've spoken to people who have been a part of the core top LLMs of the world. So then their core teams, they themselves have, told me that we are also scared of what we are building. And very soon I might also get replaced. That is what like the LLM guy. The person who is working for that LLM, he also the same thing. Even AI also scared of AI. Even they are scared of AI, and they might also get replaced. So at least in the tech world, it is evident right now. I mean, too many layoffs are happening. People are finding smarter AI use cases and letting go of their employees, which is sad to see. But then that is where the entire upskilling comes into play.
Yep.
Into
Because the competition is gonna eat out the business anyway, so you have to.
it's all coming out of margins. You don't want to pay. Right?
Yeah.
Going down every year.
Yes.
It's going up.
Yeah.
So how do you cut down on your costs?
Correct.
So that basic fear is there, and sorry, evident. So jobs are going to be affected. AI, usually people link it with stock picking, whether AI can pick better stocks.
Yeah.
It can pick stocks, it can filter stocks, it can automate your process in a very disciplined way.
Okay.
But ultimately, again, AI is also a research, some humans research which has been,
Correct.
trained on, right?
Yeah.
So it's as equal to like an efficient human working. So it's not something that ultimately it's being trained on some logic which is set by a human.
Yeah. Correct.
So I don't feel that AI can, pick stocks better. It can pick stocks more efficiently in a more disciplined way.
Okay.
And can follow the right set of rules which a human might miss out on.
Makes sense.
But then again, I don't think there would be any, secret source or rule that AI might pick, which others can't.
Okay. Got it.
You may see that high frequency trading, so which is again algo based trading.
Yes.
I don't think it's AI related, but it's just tech where logics are set, rules are set, and
Yes. Automatically buy sell.
So then also you can see you will get you will see a good arbitrage over there.
Okay.
So you might make some incremental returns because of the right timing and right exit.
Got it.
But it's not a secret sauce. Okay, I found the way to make infinite money.
Correct.
99% accuracy rate. Very different.
Got it. So you have managed the money of the previous generation, your own generation. And so what is the key difference that you see when it comes to, Gen Z investing and the previous generation's investing?
I've seen a mix. I've seen younger generation being very cautious about their money.
Oh, okay.
Which was also an eye-opener to me.
Okay.
They are, while they are spending, but when they are investing, they prefer ETFs. They prefer index funding.
Yeah.
So, going all out on 2 or 3 stocks is not their primary focus.
Correct.
People who want to do direct equity, they are also considering basket investing first.
Okay.
So, I have seen, it should be otherwise, right? That is the general impression that anyone would have.
Yeah.
But in the case of older generations, they are still having a high risk appetite. They are like,
okay,
dekhte kya hota hai, stocks le lete.
Okay.
So for that generation, the whole idea and advisory is to become more streamlined, focus more on capital preservation as we discussed.
Correct.
And over here, advisory is that, okay, you can go a little more aggressive. So it's the advisory is basically the other way around over here for both generations.
So, generally people tend to follow a lot of advice that, randoms also give because it sounds right. So what's one piece of investing advice that no one should follow, no matter who says?
Investment advice, what you're not supposed to follow.
Not at all.
So if anyone is guaranteeing anything,
okay,
biggest red flag.
Okay.
Someone tends to control the outcome, which is not possible.
Okay.
ये डबल होने ही वाला है, ये होने ही वाला है, कि ये बढ़ने ही वाला है, मैं बोल रहा हूँ, red flag, that is nonsense happening over there. Why would you try?
Correct.
हो भी क्या, 2 बार होगा, 3 बार होगा, and psychologically you will start following that person and has to
blow up somewhere. Yeah.
Okay. Then one biggest red flag would be if someone is guaranteeing any sort of outcome. No point wasting energy.
Got it. So what's the biggest investing lesson that has actually cost you money that you've learned?
That has cost me money. It's basically something that I have messed up on.
Yes. But you learn from it, obviously.
Correct. Not maintaining a stop loss.
Okay.
I mean, when your stop is going down, I have seen that original price coming to वहाँ पे आएगा.
Okay.
That I think that has been and I think this will be the worst case for anyone. Like, won't sell your stock. It's 50% down. Then it has to 200% up to recover at the price at which you went.
Absolutely.
So that is very tricky. So that is something and this will be anyone's biggest lesson, because this loss के बाद ही आपका ये biggest lesson नहीं होना है.
Correct.
There is no other theory learning which will overpower your actual financial loss.
Yes.
So when your stocks or your portfolio goes in loss and you don't take any action, that has to be the biggest loss for anyone, technically speaking.
So when you were 15 and you bought that first stock, you said it was a loss. So did you follow a stop loss or you did?
2% में बेच दिया लॉस.
अच्छा, okay.
तो कहता है वो शिट इतना कम हो गया अभी वापस आएगा नहीं. चलो.
So that was a good decision, right?
That was a good decision.
And
But foolishness also like that's not.
yeah, now focus. Okay.
2% is nothing. I mean that time I wasn't very ये तो करा यार ये तो अभी और good. तो 4 हो जाएगा ना 10 हो जाएगा क्या कर.
Okay.
That was just good old days of doing nonsensical stuff.
So, what's a belief about money that people usually have, which is wrong, in your opinion?
I mean, people say something I have heard a lot. If you spend more, you earn more.
Okay.
So I don't know. I haven't really, money saved is money earned, which is fair. That is fine. But if you spend more money, you earn more money. ये पैसा कमाने के लिए पैसे खर्चने पड़ते हैं. In business, it makes sense. I mean, you promote your business, but in personal lifestyle, if I splurge a lot of money, if I'm almost down to my, bank balance, तो अच्छा ऐसे वो जाएगा turn around. I think that is one belief which I don't know. I haven't really experienced it. Yes, अभी turn around हो सकता है, but nothing concrete as such. Might be a disappointing answer for you.
No, every answer is nice. Okay, so let's imagine, let's take another case study. If let's say your child turns 18 tomorrow and he or she asks you to, how do I become financially free in this current scenario? So how would you start this conversation and how would you end the conversation?
No. Best would be manage your own balance sheet.
Okay.
Yeah. If you are 18, if you're still studying, then it's a different thing.
Yes.
If you have some time for doing any internships or freelancing, do that. Find a source of revenue.
Okay.
उसके सामने आपके खर्चे निकालो.
Yeah.
And when we talk about costs, it's not, obviously, we are not talking about the larger expenses of home EMIs or something. It's going to be your personal expense. So the best exercise would be you maintain your own P&L.
Okay.
Manage your income, manage your expenses.
Yeah.
And this learning is going to be fantastic. If it starts at 18, nothing like it. You are only, preparing for your corporate world, career world.
Correct.
You know how to, you have been through that stress test.
Absolutely.
इतना ही है तो मैं खर्चा नहीं कर पाऊंगा. I have a friend's birthday coming over. I have to gift something. वो कैसे करूंगा? तो नहीं यार आज एक कॉफी कम. So that entire self-awareness, that mental math calculation, that's the best starting point. If I'm managing surplus, इसका क्या करूँ? बैंक पे रहने दो. कितना मिलेगा? 3% मिलेगा savings पे. Tax कटेगा. Too early, but I'm just saying, I mean, obviously, it's not fully on their own, but there has to be some mentoring, some, hey, have you thought about this? If you save money, is it still in the bank? So that you give those nudges.
Yeah.
The whole idea is that this is the good way to, ensure that they are independently managing their balance sheet.
Okay. Would you give them a pocket money of sort and then see how they're managing it if they're not doing any internship or, they don't have a source of income?
Yeah, I would.
Okay. So you would
definitely thought, but I don't see how they're giving pocket money because definitely times are very different.
Correct.
People, the circle you are in, people you are with.
Yeah.
So it can't always be in a survival mode. So definitely some source of income. This can be they are static revenue. अभी इसमें से आपके खर्चे करो. If I give you, let's say, 10,000 pocket money, so does that mean that you have to spend all 10,000? Be smart enough to spend 7 and save 3.
Invest.
So that is what eventually has to be allocated.
Correct. So Gen Z, like we mentioned about AI, like you said, that jobs are going to go away, things are going to be difficult. So what advice would you give to someone in this generation, which is very difficult to make money now, seeing how jobs are going away, seeing how it's difficult to even get into a company first, and staying there is again a different area. So what advice would you give someone who wants to become a crorepati today? What would you say?
I mean, not sure about the crorepati part, but then the whole idea of how do you survive in the world of AI?
Yeah.
So 2 things. One would be, first thing, you don't have an option, but you have to adopt AI.
Okay.
If in 2026, if you're a Gen Z, if you're having access to all the content possible, all the literature possible, YouTube shorts, learning, people are giving hacks, life hacks, this hack.
Yes.
And if still you don't know how to use AI, that's a very big red flag.
Okay.
So first thing, do or die, you have to learn using AI. ठीक है, वो सीखना ही है and upskilling करना ही है.
Okay.
The need of people helping with how to use AI is going to be very high.
Okay.
Today, सबको मालूम है AI है, AI है. But how do I use AI in this podcast?
Correct.
How do I use AI in my work? How do I use AI at my job, university, college? Wo usage, wo implementation, how to marry each other, that is still a big gap.
Okay.
So people who are giving solutions about how to use AI for small businesses, freelancers, whatever, that is something that, needs to be tapped on. So if I am a college, if I am in my college, I would definitely learn everything about AI.
Yeah.
LLMs, how they work, how to image, if it's about image, what to use, if it's about video, what to use, if it's about automation, efficiency, productivity, email automation, whatever it is, WhatsApp automation, anything.
Yeah.
You need to pick a domain and, just AI का इसमें क्या सब हो सकता है, you have to be related, and then I would definitely, go and consult small time businesses.
Okay.
Someone is not having a website, दिखा के दो, बना के दो, एक sample बने आपको, if you're interested, we can engage in some services.
Okay.
So making people realize how AI can fit in your business, how I can teach your employees how to use AI.
Yeah.
That is like the best. And crack 10 clients.
Okay.
That can be your starting point.
Okay.
For a college thing, you don't know, you don't need to know how to use coding, nothing.
Yeah.
That's very much doable.
Okay.
So possibly, in the world of AI, where people are losing jobs, you marry AI and teach people how you can use AI. That can be a good starting point. At the same time, create content.
Okay.
You have to be on the screen. People have to, keep posting, share your thoughts.
Yeah.
Pick a niche, and just get going. So, combination of learning how to use AI and making content, being in the screen, jo dikhta hai, wo dikhta hai.
Correct.
I think these two are like the basic combination. If you have a phone, if you have internet, nothing stops you. Like I'm talking about a case where I have no domain expertise. For example, मेरे को finance का कुछ नहीं मालूम. मुझे और कुछ any industry मुझे कुछ नहीं है मैंने. But I can still be very neutral, sector neutral. I can just learn it and apply it anywhere I want.
Right. Do you think surviving with a single income is possible now in today's generation?
People have been proving it.
For let's say living in Mumbai, tier 1, with the good lifestyle, with the things you see on Instagram, you want them, luxury lifestyle. Is that possible with a single income?
Depends how big the income is, supposedly. Obviously, if you have a high paid job, and if that's not sufficient for your lifestyle, how will you look out for another income?
Okay.
Can either be your investments as one option.
Yes.
Can be you are simply an investor in some company and you have an operational partner, that can be like second.
Yeah.
But if you're dividing between two places, your actual time, like an active partner.
Yeah.
Looks dicey. I mean, it looks next to impossible. If you're having a high paid job, then removing time for your second job makes it impossible.
Yeah.
So usually the entire phenomenon of having multiple sources of income always has one primary and rest remaining are secondary.
Correct.
Where you are not actively involved in those businesses.
Yeah.
So if you have in Mumbai now, your rent is the biggest or your EMI is the biggest, component of your income. If you want to stay in southern area of Mumbai, you have to, have a good job. Your primary only needs to be at a high level.
Okay.
And investments ka kya hai ki aaj aaya, this year may be lucky for you, next 3 years might not.
Yeah.
So it's not giving like a consistent, in anything, any consistent multiple source of income has to be through you investing in some other businesses which are cash flow generating.
Okay.
And where you are not an active partner. The kuch criteria milte hain only, then it is possible. So you let go of that ambition of having a it's not practically possible.
Correct. So if let's say, if we talk about a number, if you wanted, what is a good number to have? What is a good salary to have? Just what is a good income number? What is a good income for 1 year, for every year, if I want to live in Sobo, let's say, and have a luxurious. Plus, I have the future responsibilities of having a family and children. So what is a good number? A fire safe number.
So personally, I don't believe in this idea of having a good, what is a good number, what is a bad number. I don't like to rank it.
Okay.
I feel someone who is having 15 lakhs
Hmm.
salary per year,
Yeah.
they can also enjoy.
Okay.
If someone is having a 50 lakh, they can also enjoy.
Okay.
2 crores, they can also enjoy.
Okay.
Designing it. It's all about even in South Bombay, if you have like a 1 crore package,
Hmm.
even that might fall short.
Okay.
If you have a 2 crore package, even that might fall short.
Okay.
Because मुझे अभी ये मिल गया, अभी what next? Like what next is never stopping.
Correct.
Practically this, so I never am in favor of this having like this is the safe number. But then if we talk about the base fixed cost that आपको ये होके ना आपको इतना तो निकालना ही है
हाँ.
वो केस में. So then to achieve that in South Bombay, basically no. I mean if you want to stay in a good flat, maybe like let's say a 3 BHK in a good locality, आपके महीने के 2 lakh rupees तो I think rent में जाएंगे. आपके added cost 1 lakh rupees extra added cost, for outings, maintenance, staff, driver, वो सब हो गया. 3 lakh rupees. You might want to, if you're earning a few lakhs a month, definitely investing has to be a crucial part of your salary. So maybe 1.5 lakh rupees more.
Okay.
So 3, 4, 5, 6, 7 lakhs, 7 lakhs ka package, or we are again in that 1 crore wala bracket.
Correct.
More or less aate hain. That would be like a good number to survive at least in Mumbai, South Bombay.
Got it.
If you are having higher demands and if you want to somehow fit in, then
Yes.
this amount makes sense.
Okay.
You can achieve that with a lower number also by going all in. जो भी हो सब घर पे डाल दें.
Correct,
Savings नहीं
correct.
करना है.
Yes.
But then that might not be a good breakdown of your.
Right. So this is the last question from my side. If let's say you have just these next 30 seconds, everything you've done, everything you've said, everything you have on the internet posted goes away, is vanished. All your podcasts of your previous, everything is gone. Your company is also gone. What is the thing that you would like to say if you just have these next 30 seconds?
Don't overanalyze. Don't wait.
Okay.
Don't overthink situations.
Okay.
If you are confident 30%, 40% about any plan, just go for it.
Okay.
Remaining 60, 70% you will figure out on the way.
Okay.
I waited for perfection. In my first, attempt, my first app launch, first app update, I wanted to have everything in my app. And it wasn't the right choice. I didn't even know that people will accept this format.
Okay.
So, failing quickly is the best, answer.
Okay.
Yes, you're going to fail.
Yes.
You have to pivot. You have to fail. Failing faster is the key. I've also seen this on a couple of content here and there.
Yeah.
Faster the fail, the better it is for you. I think that is the key. And this is, I think, applicable in everything. Like in your personal life, it can be your business.
Mm-hmm.
Do it, realize it, fix it, do it again.
Yeah.
Stand it through.
Yes.
So nothing. Simple.
Got it. That's it, guys. Thank you so much, sir, for being here. It was an honor. Thank you so much for watching this episode till the end. If you liked this episode, then please share it with your friends, comment, like, let me know who you want me to bring on as the next guest, and absolutely subscribe to that channel because I am a solo founder and I want a few subscribers. And as always, mind first, money follows. Thank you, sir.